Shalom everybody, it's your brother Leon the Servant back here with another video on this Yah blessed day. Kala to the Abba. Whole time I could have adjusted this, but it's alright, it's cool. So today we're going to go to the charts and we're going to talk about how we can use the 72-day EMA. Actually it's not the 72-day, but it's the 72 EMA to spot trades and to look at key structure in the market. So we're going to switch over to the other screen. All right, we're going to, let's get that. I don't know why it's doing that. Let me do this real quick. All right, what I could do is I could just remove it. And I could just add it back again. Just gotta add the camera back. Give me 1 second, family. This is live, by the way. This is definitely live. So, all right, there you go. All right, we're just gonna adjust this real quick. You don't need all of me. There you go. All right, let's go. So let's move this up. We got the SPY up here real quick. We got. All right, let's get into it. So we got this SPY on the daily chart. I'm gonna come over here on my screen, put like this up. You guys should be able to see it pretty well. Yeah, it looks like everything's being seen pretty well. All right, so let's get into it real quick. I don't want to make this video overly complicated. I've seen a lot of people made it overly complicated. Let's actually get all this stuff off of here. We'll talk about why I had some of that stuff up there in a moment. But let's just start with a blank page, and let's make this beginner friendly. So we have the candlesticks here. Green means up, red goes down, and then we have some trends, right? So right now we are on. We have the day time frame going on here, and it spans back actually 5 years, which I have currently on. Let me actually. I want a full screen. Okay, I can do it like this. Okay. Yeah, it goes back 5 years, but we're going to just focus on this most recent price action right here within this last year and some change. And I want to put on our EMA, right? And we're going to explain what that is real quick, and then we're going to get into it. So EMA, which is an exponential moving average, which simply just means that it weighs the most recent action a little bit more heavier than some of the older action that you will find with a simple moving average, which will just take all of the price history and weight it equally. But with the 72, it has a stronger presence on the most recent price action. Okay, why is that important? Let's get to it. It's important because we have smart money, and we're just really looking for entries. And with doing this, we're now starting to have a measuring stick. If the market is above this 72 EMA, we have a healthy upward trend. If it's below the 72 EMA, we have either a potential pullback, right, or we have a potential pullback. That's just about it. One thing, wow, why is it not allowing me to see all 5 years? Maybe it is trying to let me see all 5 years. Let's actually expand this just a little bit longer then. Let me do a custom time frame real quick. We're going to add one. We're going to do daily. We're going to do 15 years. Why not? All right. Just so you guys can get like a better view of this real quick. 15. All right. So now we can actually slide to the side. The reason why I said it's either a discount or just a discount, because as you see that when the market is below the 72-day moving average, it's not below for a long period of time. It normally snaps back, and we do have times that it comes down below, and we're going to talk about what to do when we have a strong pulling away from the 72-day moving average, which generally means that we have some really high highs to come in when we have these really deep pullbacks. Um, as you guys can see, actually, we're going to just put some lines up here just so you guys can kind of see, make sure that everyone's seeing exactly the same thing. So like for instance, it pulled back. I'm going to put this line right here. It pulled back down here, right? And we go look to when it first hit here, it actually hit practically recent or close to all-time highs. When it pulled back here in, I would say this is 2015. And then when it happened again in 2016, we went up and we had new time highs. You know what I'm saying? Right? So just you can see that as a constant trend as we move on and up through the time frame. Right? Every time we dip down right here, once again, we dip down, we had new time highs all the way up to here. Right? Same thing here. Dip down, and then we do this, and then we come up. We have highs here, right? And then it stalled out for a little bit, and then we have even more incredible highs that happen over time, right? Within that about a year period, right? And same thing we have with April, right? So I just want to get rid of all these lines real quick. I just wanted to showcase the history on the day time frame with the 72-day moving average. And that generally speaking, when we break below the 72-day moving average, right, we have more room to run. Now we do have this case study back in 2021 where we was actually primarily throughout the entire year under the 72-day EMA. And with that, I actually want to talk about some other types of market structure and why we don't just use the 72-day moving average alone. We use it in conjunction. So let's actually dive a little bit deeper into how do we use this in conjunction so we have a better understanding of how to utilize this tool, right? So I am going to take a random case study. Let's take this one right here. And I want to make sure it's recent so that you guys can see how this is. We're going to take a case study down here. We're going to take a case study down here, and we're going to actually stay all 3 times where it happened. I guess you can include this one too. 4, 5. All right, we're going to include all 5 of these times when we broke down, and I guess you could include when it initially broke down, right? Of this 72-day moving average. And then we will also get into on scale on what to do when we're not near the 72-day moving average, and how do we look in for entries from there? Because as you can tell, each one of these are individual days, so this is multiple weeks that these plays move on. All right, this is definitely great for people who consider themselves to be a swing traders setup, but there's also something that we have for more of a active. I would still say it's a swing trader setup, but it will have more entries, and quicker price targets. Right. I personally am not a day trader. I like to swing trade. Makes my life a little bit easier. There are times that I have day traded and I was successful in that. I just think that when we start getting really choppy, like how we've seen most recently with these last few days, it's just not really for me. I like to see a very clear structure, clear pullbacks, and getting on these pullbacks. All right, so let's get into this very first one that we have marked out over here, right? So we're going to come over here. We're going to block this whole thing off just so that we can get a general feel for price structure and how this trading philosophy will work out. All right. So now we're going to switch this, and we're just going to mark off some crucial areas, right? So at this point in time, if we was to go back in time here, we see that we're near what looks like all-time highs, right? These are some recent lows, and I'm just going to make this real simple for you guys. Let me zoom in so you guys can see this really clearly. All right. So right here, you see a whole bunch of stuff going on, right? You have this relative price structure that's coming up, Let's see how we have these tops and they're relatively smooth. Like if I put my cursor on here, how it makes a line and it kind of touches them, right? That's a point of interest. So we're going to put a line there, right? Also, another point of interest is where we see the same thing happening on the bottom. So you see how relatively right here, do we have this candle kind of touch close to this line? I could move the line up just a hair, maybe something like that, right? So we have this candle goes through it. We have this candle touch it, this candle touch it, this candle touch, and then eventually we break down through it. So this is why this would be a key point of interest if we didn't have this that happened over here. All right. So now that we have this day mapped out and we have a relatively decent understanding, we want to then come down and oops, I lost my spot. Ooh, I don't. Is this right here? I don't know if I have it open. I don't know if I can come down to the 4 day. 4 hour. Not that far back. Okay, if that's the case, all right. If that's the case, what I like to see here is that we broke down. We came to fill in this gap, right? And this gap actually coexisted right along with the 72-day EMA, right? As we start trading down into this, what you would be looking for on a day-to-day scheme is to say, okay, did we hit? We'll also look on a higher time frame as well. Let me bring this up too, right? Now you guys have a better understanding. So the 72-day EMA is great, but you need to have market structure. You get market structure by seeing bigger time frames. So if you're on a 2-hour time frame, you're going to want to go to a day time frame. If you're on a day time frame, you want to look at a week or a monthly time frame, right? And in that structure, what we're trying to see is probable places for a pullback, right? Probable places where price needs to be corrected. And we're using this 72-day EMA to use as a confluence with our market structure analysis in order to really get that down, right? If we come back and we look at any of these times that we start running up, and we melt up to these highs, or we melt up to the point that we're hitting new all-time highs, then that's when we start looking on a day-to-day time frame. Okay, where is the 72-day EMA? Where do I like to see my pullbacks? And we see we come close to any of those, right? On a week time frame, we didn't hit the 72-day EMA. But when we start seeing big confluences where we have the 72-day EMA and the day EMA, like how we have over here, which I can actually, let me bring this side by side to be honest. Let me bring SPY up real quick. And I want to make sure this is nice and clear. And right? And then we're going to bring this EMA in. 72. Oop. I forgot. I gotta hit this. And 72. All right. And we're gonna make it the same color. All right. And apply. Cool. So cursors line up. We broke to the 72-day on a daily, and then on the weekly, we even came all the way back and we tested it on the weekly. Down here where this circle is, right? Now, perfect buying opportunity. It was actually the best buying opportunity we had all year, right? And we could see that. The real thing is, and a lot of times that when I watch a lot of people talk about these strategies, they don't really tell you like how it feels when this strategy will pay off. So I actually want to get into that and to really start understanding how you will start thinking about implementing this trade. So now, let me give the first caveat. The 72-day EMA is going to be used only for discount buying, right? It's not used in a context of saying, okay, we're in a bearish market, or okay, now it is time to short the entire market. that is not how I look at the 72-day EMA. I mean, some people use it for that. I just haven't found it to be that useful. For most of the time, the chart is above it. Now, the other thing I wanted to say was that the 72-day EMA becomes very interesting when you have noticed that we've been trading up high, right? So a lot of times people be like, well, when do I get in the market? When do I get in the market? When is it not, when are we at all time highs? And I don't want to get in at all time highs. When do I get in? What's my signal? Well, the Fibonacci, which we will cover in a different video, is definitely great for finding retracements. But when we're talking about just something that you can kind of just do the eye test and see, okay, is this showing that we are getting support? Have we dipped down recently? And generally speaking, when we start touching the 72-day EMA, like as you've seen in the past, we hit on a massive run. So then we should start looking for other opportunities and other stocks that are being held by these ETFs. So like if we're looking at the SPY, it'll be Nvidia, we'll be looking at Apple, Microsoft, and the things to the like. With all that being said, it's imperative that we keep in mind this. You're looking for a pullback. Pullbacks happen all the time, even if you don't see it on the weekly or the daily. You can find it on the 2-hour. We'll show that as well. But the idea and the concept is that whatever trade you're going to do, you're banking on the factor that the market goes up 75% of the time, right? You're banking on the factor that the market will find a reason to go up, right? And then also if you get in at points where there is interest, right, or key levels, or you hear liquidity, or you hear supply and demand, right, whatever you want to categorize it, if you get in low or close to those points, that's when the 72-day EMA really starts to shine, right? It really starts to shine when you have structure right below or right above the 70-day EMA. And that could be, it's going to be used as essentially a trampoline. It's going to launch price up as you see on the chart, right? And this is a perfect for when you're talking about buying and holding stocks. If you're trading options, you definitely want to have time on this. If you are trading a day indicator, then you want to have weeks, let alone weeks, maybe even months on your time frame for everything to play out correctly. Now, if you was doing this on a 2-day, then maybe you only might need, or a 2-hour rather, maybe you might only need a week or two, right, for everything just to play out correctly. Let's actually bring up a 2-hour just for some context, right? All right. So, look, over here, this whole entire time where we're going up and up and up, there has been pullbacks. Like, for instance, I'm going to draw some lines, and we're going to start seeing some key correlations. So, or I'm going to draw this rectangle right there, right? We saw something right around here, right? We see another pullback right around here, right? And we seen another pullback technically here. All those are in hindsight. But what you do notice is that on the 2-hour is that it's not really in hindsight. You can see that it's under the 70-day, 72. In this case, it will be a 2-hour moving average. But you'd be like, well, Leon, those are well below what we have going on. How do I know those are the best trades? I just add one more EMA, and I add the 420 EMA. And now we start seeing a really nice picture, right? You can see that every time we hit this right around here, right? Look at this structure. I'm gonna blend all this together real quick for you guys. So, boom. Let's talk about this real quick while we're calling this structure, right? Would have made us evaluate this as such. If we come over here, we have this open, or that's closed, right? We have this low. We have practically almost 50% retracement right here. We shoot through this wick as well. That's why this whole entire area becomes a line of a place of interest. If we come over here, right, when it first started, right, over here in this section, right, didn't really give us much, right? Maybe you could see it floating around. If you would have took it on a 2 hour and your hypothesis was just that we're going to take it and run, this was a consolidation that you was looking for, right here. Yeah, if this was a little consolidation that you was looking for, and you was looking for a breakout, and using maybe the 72 EMA on a retest of that area, that would have netted you pretty nice results. But we're talking about this candle right here. When we gap down, right, we come right back into this zone, right? We see a perfect confirmation with the 420 right there, and boom. This is perfect. Perfect retracement right there. Let's go look at another one. See another time when there is a place of interest. Reason being is, once again, we kind of have this shelf that's being built. All right, nope. Right here. From here all the way over. Now, price comes up, shoots down. Then we come in here, we shoot above it, and then we come right back down. Look, we close right above it, even though we shot through it and came back up. That's what would have made this place a really interesting place of interest. Really interesting right here. Okay, price runs away. We wouldn't have had a trade over here for the 420 yet. We come back a few days later, and look what we have here. 420. Right there alongside with the perfect retracement on a 2 hour time frame. Let's do this again. All right, let's come over here as well. All right. So look, so we have this part right here, which would be interesting. I don't really see too much on the, I mean, I guess you could say this is interesting. This is something that actually does catches my eye. So this open right here, this close, right, is right next to each other, or the open of each day is right next to each other, and it looks to almost be right in line with this day, right? If you come over here to the 2 hour, let me zoom in real quick over here. We have some consolidation from overnight. We have some, yeah, I mean, this is interesting on the 2 hour, right? Is this when Jerome Powell was speaking? I feel like this is for this spike right here in the middle of the day. I feel like that's what that was. Or no, I think this was Jerome Powell. I'm interested in what caused. I want to know what the news catalyst for this was. I'm not entirely for sure. But what is interesting is that we come right back and we trade in this. We trade right back over here, and we look at that line that I drew that was of interest. We come back here and we come and touch it. did not give us a retracement back to the 420. It just didn't. And that's something that you're going to see with setups. They're not always going to give you exactly what you're looking for, and that's okay because you trade the setup. You trade the setup. All right. I mean, I probably wouldn't have taken this trade until at least the second touch. Yeah. Okay, so I'm looking at this, and I don't really see too much. I don't know if I really would have taken this trade, to be 100% honest. I do see that the price came straight down, cut through it. It came back up, was above it. Still below the 72. Yeah, this all this to me was kind of, yeah. I would have stayed out of this whole entire trade. There's nothing here. I'm looking for a sharp reaction. I'm not looking for for it to dawdle around. That's how you just saw right there, right? So that's what we do for if you're trying to find more intraday or you're trying to find more setups for this, is that we just have to put on a different EMA with confluence with the 72-day EMA, and we start to see a story that plays out. Then we pay and we cue in on market structure, on some key lows and some key highs, and then we start to really build out a format of, okay, where do we see institutional buying happening at? And that happens when we start seeing these discounts, when we start seeing the 72-day moving average on a day gets hit or on the week gets hit. And that's just one of the markers that I have for you guys. And this also kind of keeps you from trying to chase all-time highs. And that's where a lot of people lose their money. A lot of people are losing because they're buying at the top. Right here is how you start to find discount strategies. And this strategy works best in a trend and understanding what the trend is. And if the trend starts to change, being able to pull back and wait for a few days of clarity. Like this right here, I didn't even do anything during the day. I didn't find anything. At the same time, I work, so I'm not out here looking at the charts in the middle of the morning. Excuse me. I'm not looking at the charts in the middle of the morning, trying to see what's going on. Okay. Shalom, Solar Cap. My apologies. I've been working. Working. Trying to get this out for you guys. All right. I hope that this right here started to add some more clarity. I think that my camera was in the middle of the way. Okay. I might have to re-record this.